Right now, part of policy announcements, plenty of stocks will be in focus. One set of stocks, of course, is there's the NBFC pack, especially the likes of an REC, PFC, IREDA, and we'll have those stocks on your screen in just a bit. Reason for the spike in the counters from the lows is largely because project financing provisioning and ECL provisioning has been pushed at least till the 31st of March 2026, and therefore for fresh projects that they finance, they won't have to make provisions as of now, and there is at least clarity that at least till FY26 the numbers won't get dented as a result of that. So positive for all of those three counters. Decentish, we saw a bit of a spike and now we've seen a bit of a cool off, and that's why some of these stocks are in focus on the back of that. Also, you have LCR norms which also have been pushed, which is liquidity coverage ratio norms, which were expected to impact banks like a Federal Bank, and you can see the spike on the stock on the back of that. You also had IndusInd, which has been doing fairly well in trade today, and Axis Bank. Those are three key beneficiaries, among others, of the LCR norms being pushed at least till 31st of March 2026. So some of these stocks moving. Avinash, quick view with regard to any of these which would be on your radar, and just the manner in which the policy was structured in your view. Does it leave room open for even entering some of the PSU banks, given that LCR over there also is slowly becoming stretched?
No, I think I've been earlier also telling your channel that PSU banks have become quite attractive looking at the valuations. There might be a little lull in maybe the next quarter, but I think hopefully once the rate cut benefit starts coming in, I think you could see growth coming back for these banks. I think the bigger issue is that most of these banks are now sitting on much healthier balance sheets. Their asset quality and their loan book growth is also quite strong. So I think, banks like Canara Bank, Bank of Baroda, which have posted decent numbers, I think could definitely be looked upon, from a slightly longer term horizon. Banks cannot be ignored because, if the economy is going to grow, despite the fact that, GDP growth in the near term could be a little bit cloudy. But if you're looking at the medium to long term horizon, I think something like a Canara Bank, a Bank of Baroda can definitely be considered, since the risk reward could be quite significant once the upturn starts. So yes, PSU banks could definitely benefit. And as I said, the rate cut is actually going to benefit certain pockets like consumer durables, two-wheeler companies, where I think definitely the interest cut is going to help buying more of these kind of items by the participants. And most importantly, the 12 lakh exemption is also going to come in play, but you will have to give in a couple of months before actually we see that getting reflected in the numbers of all these companies.
Well, on the charts, of course, some of these stocks, PFC, REC in particular, have not looked all that bad today. And from a valuation perspective too, not terrible if you will, actually pretty well placed, I would reckon, both of them, relative to a lot of other financiers as well, despite the fact that a lot of NBFCs have corrected. Kunal, resilience today at least for PFC, REC, any thoughts here, or are maybe metals a better bet from a trading perspective? So I bother with maybe a PFC, REC.
Yeah, I think definitely metal looks strong comparatively. But I think even for REC, PFC, I think the kind of selling pressure what we got from higher levels, now I can see some base formation happening at the lower levels. However, we need a confirmation for both. So for me, PFC, I'll be looking out for levels of 420. That is a strong resistance. If that is taken out, we can confirm the bottom formation, and then at least we can see a rally towards 480, 490 levels on the upside. And even for REC, the same, the structure where the higher end resistance is placed at 460. And once that is taken out, we can see that at least it is going towards that level of 520, 530 on the higher end. So watch out for these two levels for both REC, PFC. Once they are taken out, you can at least expect a 6 to 7% rally on the higher end.